Hi everyone, I'm Brandon from Basic Wisdom. Today we're going to take a look at a real-world equity-based mutual fund and figure out what exactly is it investing in. Today we're going to take a look at the Fidelity Magellan Fund, which is a very historically relevant fund. If you have any knowledge of the history of finance or mutual funds specifically, then you probably know about Peter Lynch and his history with the Fidelity Magellan Fund. And this was probably the most popular fund in the world at one point in time. And it was mostly because of how successful it was. Today, we'll take a look at the modern version of the Fidelity Magellan Fund. On Fidelity.com, you can look up any of their mutual funds, and you can actually bring up a list of exactly what the mutual fund is investing in. It's really simple to get there. Once you've found your fund, you'll land on a page that looks like this. If any of this information on this page looks a little bit like a foreign language, I actually have another video where I break down all the important parts that you need to know for your exam that are relevant on this page. Go ahead and go check that video out. Now, if you find your fund on Fidelity.com, all you'll need to do is click on the prospectus link at the top of the page. So let's go ahead and do that. The first thing that's going to pop up is a summary of the prospectus, which basically will give you a high-level overview of the objectives and the risks associated with this fund. But that's not what we're looking for today. We are going to click on the monthly holdings report at the top right tab. All right, so this is what it looks like. This is our portfolio holdings listing of the Fidelity Magellan Fund. Now, this report is a little outdated given that it's June 20th today, so about 2 months old, but you're never going to find a real-time report of what the mutual fund is investing in. Otherwise, people might just copy the formula of this mutual fund and just do exactly what it does, and they wouldn't have any investors if they did that. So this report that they send out that lists everything they're investing in is always going to be at least a month or two delayed. But we're going to scroll down a little bit, and the first thing that we're going to see are the top 10 holdings of this fund. And we can see, if we look kind of towards the bottom there, that 26.3% of the fund is invested in these top 10 holdings. Let's remind ourselves that this is a large cap growth fund, which basically means it's investing in huge companies that are growing faster than the economy. The very first one we see is Microsoft. Yeah, I think we've all heard of Microsoft before. And about 5% of the portfolio, $849 million is invested in Microsoft. That's a lot of money. Amazon is next. Of course, everyone's heard of that. United Health, JP Morgan Chase. And then we see Alphabet, which is actually Google. Alphabet is the company that owns Google, and for all intents and purposes, you can just think Google. Now, Google has two different share classes, which are Class C and Class A. There's a difference in how their voting structure is set up. If you add those two share classes up together, that gets us to about $803 million of market value, which would make that really the second most held security in the portfolio. Yeah, there are two different share classes, but they own a lot of Google here. And then we just basically make it through the rest of the list with Apple, Berkshire, Bank of America, Northrop. Now, this list is not the end of it. Almost every mutual fund will tell you its top 10 holdings. But the great thing about this information in this document here is that it goes further than this. And actually, we can see everything this mutual fund was investing in as of April 30th of this year. So if we scroll down a little bit further, then we'll see our full holdings list. And we'll see a little bit of a repeat. The first 10 things that are listed are going to be obviously the top 10 holdings. But once you go down from there, we'll see Home Depot, Facebook, Netflix, Visa, Wells Fargo. One thing I always find super interesting is the fact that a lot of these investments are only, say, like 1% of the portfolio. So, for instance, if we look at Netflix is about 1.5% of the portfolio. But that 1.5% equals $264 million of an investment. That's huge. I'm going to scroll down a little bit further and just take a look at some of the random companies that I've heard of before. There's Charles Schwab, BlackRock, MasterCard, McDonald's, Salesforce.com. This is just the first page here. We've seen about 40, 50 securities here on this page. Obviously worth over a couple $1 billion. That's a lot of money invested just on this first page. But that's not it. You can scroll down even further and see, hey, wow, there's a lot more. Let's see, what do we notice here? U.S. Bancorp, Dollar Tree. Heard of Roku before? It's a TV thing, I think. Southwest Airlines, okay. Sirius XM, GoDaddy, Lyft. You know what's interesting here? Lyft is not a publicly traded company. And you might be wondering, okay, if I want to invest in Lyft, how do I get into it? Well, as an everyday normal investor, the answer is just, you can't unless they go public. But remember, these mutual funds are huge institutions. And for those of you who have made it this far in the material, you may have learned about private placements. Private placements are basically ways for companies to sell securities that are not registered with the SEC. Basically, they haven't gone through that whole 20-day cooling off period, filing registration paperwork with them. And because they haven't gone through that process, they can't offer their securities to the general public. One thing that you'll learn about private placements, though, is that if you're dealing with wealthy individual clients or institutions, you can sell your securities without having to go through that big SEC process. And while I don't know the specifics about how the Magellan Fund got shares of Lyft, I can almost guarantee you they got it through some form of a private placement. These are restricted shares that they hold that are not registered with the SEC, but if you invest into the Fidelity Magellan Fund, you own a little piece of Lyft, which is not a publicly traded company. Yeah, pretty cool. And also, same exact thing with Uber down there. And the interesting thing is that it says Uber Technologies, Series D 8%. One of the interesting things you'll see with these Uber shares is that, yeah, they're Series D, which could mean anything they want to make up. It's just a very specific version of a share they have. But it also says 8% after that. If you look up at all the other stocks that we looked at, none of them had a percentage attached to them. The only thing that would make sense here is that these have to be preferred shares of stock that do have a coupon attached to them. Preferred stock is a little bit different from common stock. And the big difference there is that preferred stock comes with a set fixed coupon. And that's what that 8% is. When you hold preferred stock, the idea is that it's going to pay you a dividend based upon that fixed rate. So if I had a $100 chunk of Uber Technologies, I would expect that to pay me $8 in dividends every single year. Okay, great. So let's scroll down a little bit further and we'll see if we get to the end of our securities list on the next page. And once we get to the end of our list, we see a couple of interesting things. I think the most interesting thing is that Clinical Data Inc. There are some rights there. Remember, rights give whoever owns the rights the right to buy stock at a fixed set price. Now, those rights are only worth $10. I don't know how many they have, but I don't know. Just interesting to look at. It literally makes up 0.000% of the overall portfolio because it's just $10 compared to a $16.3 billion fund. It's nothing. Now, that's not the end of it. We're going to keep scrolling down, and we're going to see some interesting things at the end here. As we scroll past our list of domestic equities, we're going to look more into the international realm. Some of these will come from developed markets, which basically means that these are first world countries or industrialized countries. Now, once we look at the totals there, $343 million in developed markets, that's a small percentage of the portfolio. Most of the Magellan Fund is invested in domestic stock of some form. So only 2% it comes from the developed international markets. I recognize some of the companies under the developed markets list, like Suncor or Shopify, but for the most part, that's just a small portion of the portfolio. And if we go below there, we'll see the emerging markets total. Now, as we go down a little bit, emerging markets are still international. But these are from countries that, historically speaking, have not been a big player in the economic game. So some countries that come to mind for me are like Argentina, Pakistan, maybe even something like Taiwan. These are all countries that are starting to pick up their economic activity in the international markets. Now, once we look down this list, there are a few that I recognize right away, like Royal Caribbean, Alibaba, Carnival. But once again, this is not a huge percentage of the portfolio. Only 2% of the portfolio comes from emerging markets. So if we're thinking, how much of this portfolio is invested internationally, only 4%. Well, let's go ahead and scroll down to the very bottom, the end of this document, and we'll take a look at how much cash this fund has. Now, you might be wondering why a fund that invests in stock has any money in cash. Well, a mutual fund always has to have at least a little bit of cash available to them in order for them to make distributions to their clients. So if a customer of the Magellan Fund calls up Fidelity and wants to sell their shares, they have cash on the side that they can pay them out for those shares. Otherwise, if there's not enough cash to take care of those distributions or to pay their investors once they sell the shares, the fund has to go into the portfolio and sell some of these securities to make up that cash. And fund managers really don't like having to sell the securities in their portfolio just to pay cash to the people who have sold their shares. Think about it this way. If your friend gave you $10,000 to invest into the market and to make money for them, and then you put all that money into the market, and then say like a week later, they called you and said, oh, I need $2,000 back. I ran into an emergency. You have to go into that portfolio that you worked hard to create, and you got to figure out, hey, which one of these things do I have to sell? Even if your plan was to invest into these stocks and hold them for a couple years, you've got to sell something to make up that $2,000. It's kind of like that with a mutual fund, but just with big, huge numbers. And the interesting thing that I find here is that, yeah, the Magellan Fund has $107 million just sitting in cash ready to give out to its investors in case they sell their shares. But really, that's not a ton of money, especially when you look at what percent of the portfolio that makes up. I've seen some funds, especially in a bear market, have up to 5 to 6% of their portfolio just sitting there in cash, ready to pay out to investors. If something crazy happens in the market, and let's say people start getting freaked out a little bit and they call up their brokers and tell them to sell their Fidelity Magellan shares, there's not a ton of cash here to give out to investors. And in fact, that's kind of the ripple effect that sometimes bear markets have. If the Dow or the S&P 500 starts dropping 5, 10% over a couple weeks, investors start freaking out. And if those investors hold shares of the Fidelity Magellan Fund and they call up their brokers and tell them to sell their shares, well, once the Fidelity Magellan Fund runs out of cash, it has to go into its portfolio and it has to sell more securities, which will bring down the market too. So do you see how that can be a little bit of a domino effect there? Well, the market's going down and people freak out. People sell their mutual fund shares. Their mutual funds then have to sell the securities in their portfolio. And all that selling usually amounts to prices going much, much, much lower. And that's how bear markets accelerate and get worse and worse and worse. There is one other thing listed under cash, which is that random forward contract worth negative $1.6 million. Don't worry about what that is. Unless you're taking a Series 65, the term forward contract won't mean anything to you. And in fact, if you're taking the Series 65, nothing that we'll talk about here will help you understand what a forward contract is, so don't even worry about that. The bottom line is that the Fidelity Magellan Fund is a large cap domestic equity fund. As we witnessed, this fund is invested in large, big companies like Microsoft and Berkshire Hathaway. And in fact, it follows its objective. Hopefully this video gave you some context and some real-world examples for what exactly a mutual fund is investing in. The Magellan Fund is one of thousands of different funds out there, and they all do things a little bit differently. But ultimately, what are they doing? They're taking money from investors, investing that money for them, and hoping the choices that they make money for their investors. It's that simple. Please reach out to me if you have any questions or you need some help with the licensing exam that you're preparing for. And also leave some comments on these videos that I create. I'd love to get some feedback. I'd love to hear if these are actually helping you understand the material that you're reading. Thanks again for watching, and I'll see you next time.